Hey everyone, and welcome to The Explainer. Today, we're going to peel back the layers of the Cardano ecosystem. And we're not just going to stare at charts and prices, we're going to dive deep into the real economic activity, the projects and the strategies that are actually building out its economy. So let's just kick things off with a big question, right? What truly makes a blockchain ecosystem thrive? Is it all just hype? Or, the price of its token? Well, yeah, those things get the headlines. But the real, sustainable answer, it's something way deeper.
You guessed it. It's the builders. I mean, the true sign of a healthy ecosystem is that it's like a bustling digital city, right? It's full of projects, creating actual utility, attracting users, and generating real value. So today, we're going to take a little tour of some of the key builders making some pretty big moves on Cardano.
All right, first up, we have to talk about the financial core of any modern blockchain, the DeFi growth engine. This is where the money's flowing, where value gets swapped around, and honestly, where most of the day-to-day action is really happening.
Okay, so check this out. What's wild here is the sheer dominance of just one player, Strike Finance. I mean, just look at that pie chart. They are handling almost half of all trading volume on Cardano. That is huge. You don't get that kind of market share by accident, right? That tells you this is a protocol that users really trust and find super useful.
So, how are they pulling this off? Well, they're constantly tweaking their economic engine. It's pretty smart. They lower the fees for traders, which naturally encourages more people to trade. More trading means more fees are generated in total, and that turns into bigger rewards for the folks providing the liquidity. It's this awesome feedback loop.
And you can see that feedback loop is already paying off. Big time. This number right here, this is the proof. 125,000 ADA sitting in the rewards pool just for stakers. It's not just theory. The engine is running, and it's spitting out real value back to the community.
And get this, they're not even close to finished. Their goal is super clear and pretty ambitious. They want to blow past the 1 million ADA mark in rewards paid out to stakers, and they want to do it in about the next 2 months. That shows some serious confidence.
Okay, so Strike Finance is all about that trading volume, but other protocols are playing a different game. Let's look at Angel Finance. This table here kind of peels back the curtain on their treasury. And what you see is that it's not just a pile of cash sitting there, no way. It's an active portfolio. They've got money out in loans, working hard in yield farms. It's a living, breathing thing.
And the bottom line from that whole active treasury, it's this number right here. That's pure profit. Over 28,000 ADA that's ready to be distributed directly to the people who hold their token. It's another great example of a protocol built to be profitable and to share that win with its users.
You know, this whole idea of sustainable growth, it's a theme we keep seeing. Take another protocol, Flow. They're making some serious headway, already over a third of the way to their goal of 25 million ADA in total value locked, or TVL. And if you're not familiar, TVL is a super important metric. It's basically all the assets locked into a protocol, so it's a really strong signal of user trust.
And this slide just lays out their strategy so perfectly. It's a textbook virtuous cycle. So, step 1, they automate how fees are handed out, so liquidity providers get rewarded instantly. Step 2, that makes more people want to provide liquidity. Step 3, with more liquidity, there's more available for other people to borrow. And step 4, all that borrowing activity generates more revenue for the protocol itself. It's simple, it's elegant, and man, it works.
Okay, so let's shift gears a bit. We've seen how DeFi is driving huge volume and community rewards. But there's another really critical frontier that's being built out, and this one is designed to bring in a whole different type of user. We're talking about the big players. This is all about privacy as a gateway for institutions.
And this comparison just nails the core difference. See, most blockchains, by their very nature, are totally public. Every single transaction is out there for the world to see. Midnight, they're taking a completely different path. They're building a platform that's both private and compliant. And that combo, it is absolutely crucial if you want to get serious institutional money in the game.
And this quote really sums up their mission. The whole idea is to let big institutions use smart contracts, but in a way that protects their private data. I mean, think about it.
If you're a company, do you want your payroll or your supply chain logistics broadcasted on a public ledger? No way. That's the exact problem Midnight is being built to solve.
And this isn't just a white paper dream. They're making it happen by partnering with BitGo. Now, if you've been in crypto for a while, you know that name is a very big deal. BitGo is a massive global custodian for institutional digital assets. So this partnership, it's a huge vote of confidence. It's the secure, trusted bridge that institutions need to actually start using the Midnight network.
Okay, so let's zoom out for a second and look at the big picture here. We've got this booming DeFi engine on one side, and this really strategic move into institutional-grade privacy on the other. So what does all of this activity really mean for Cardano?
Well, the main takeaway is that Cardano is basically building out two powerful but very complementary economic layers at the exact same time. So, on one hand, you have these high-volume DeFi protocols creating a super vibrant, rewarding economy for everyday users. But on the other hand, you've got privacy solutions like Midnight building the secure, compliant plumbing needed for big institutions to come on board. This whole two-pronged approach, focusing on that sustainable growth, is designed to build an ecosystem that creates value for everyone, from a single person staking their coins all the way up to huge corporations.
And you know, even while all these massive strategic moves are happening, the energy of the ecosystem is also felt on a much more personal level. I mean, you have projects like Bonsai Masters engaging directly with the community. Here, we're shouting out a recent 188 jackpot winner. It's a fun little reminder that the whole point of all this tech is to create a system that's alive and actually rewarding for real people.
And all this brings us to one final big question. With these foundational layers for both public finance and private commercial data getting stronger by the day, what's the next big real-world industry that this stronger, more robust Cardano ecosystem could really disrupt? You know, whether it's supply chain, healthcare, or even traditional finance. What's next? That's all for this explainer.